You can't escape crypto in the headlines these days. Here to break it all down is Matt Hougan from Bitwise. Matt, thank you so much for joining me.
Thanks for having me.
Absolutely. So as I mentioned, crypto is everywhere right now, obviously seeing a lot of volatility in the markets. But what I want to ask is, Bitwise is the creator of the first cryptocurrency index fund. What does that mean for investors? What does that mean to our marketplace?
Sure. The core idea behind the Bitwise 10 crypto index fund is the same idea behind the S&P 500, which is that some investors want to pick and choose winners in the market, and others just want to make a broad-based allocation. At Bitwise, we think crypto and blockchain is one of the most important advances in the market over the last 10 years, and so we're enabling investors to make a bet on that market by holding a risk-screened portfolio of the 10 largest crypto assets, captures about 80% of the market, and we rebalance it every month so it's always up to date. We try to make it easy for advisors to get into crypto with an index-based exposure.
And the case to be made around investing in an index fund is really to diversify and reduce risk. But with crypto, obviously a lot of risk. So what's the case to be made there?
Yeah, it's still true within the index fund setting, right? You're de-risking that you'll pick the wrong horse, that you'll buy Ask Jeeves and not Google, or Pets.com and not Amazon, right? So you're de-risking that. But you're absolutely right that as an asset class, crypto is extremely risky. What that means for investors is you have to right-size your portfolio. We work with about 1,000 RIAs. The average allocation in a client's account is something like 2.5% of that portfolio. So right-size your portfolio, rebalance regularly, and then tell your clients that this is going to be a volatile allocation. It's going to go up and down. Look, crypto is the best performing asset class in the world over the last 10 years, but it's had 70% drawbacks. This is just part of the asset class. It's not a fun part, but it's true. It still means you can use it in a portfolio if you size your portfolio appropriately.
And obviously advisors can't really ignore this anymore. It's here to stay. We're seeing companies like Bitwise really take the bull by the horns and run with this. But how should advisors be educating themselves about this and getting access to information like this?
Yeah, I love that you asked that. That is the first step. You have to educate yourself, because whether you like it or not, clients are going to come to you with questions. And if you don't have good answers, they're going to find an advisor who does. The good news is there's a lot of high quality information. We host some of it at Bitwise. I'd point to one resource that I really like. It's sort of talking my book because I co-authored it. But the CFA Institute put out a guide to Bitcoin, blockchain, and crypto for financial professionals. It's a 64-page guide. It's balanced because it had to go through the CFA's guide. If you Google CFA Guide to Crypto, you can find it. It's a great place to start.
So as we ride this wave right now, what is your advice for investors right now that can certainly stomach this?
Yeah, you have to think about, has anything changed in the crypto market, right? Sure, the prices have gone up and the prices have gone down, but has anything fundamental changed about blockchain and crypto? And I would say the answer to that is no. Blockchain is a technology that allows money to exist on the internet, lets you program money like software. It creates the possibility for digital property rights. There's still a lot of institutions coming into the market, still a lot of venture capitalists coming into market. So the long-term outlook is bright, but it is a volatile market. You have to be prepared to hold through the ups and downs, and that means, again, right-sizing your portfolio. I can't emphasize this enough. 1 to 5% for even risk-tolerant clients is probably the right zone to be in. Above that, you're probably taking on more risk than your clients can stomach.
Well, it's not a casual investment, right?
That's right, exactly. It's not a casual investment. You have to be serious about it. You have to allocate to it. I will say that our clients, the advisors who have allocated in the past, they've held through these bear markets. In 2018, crypto went down 80%. We had net inflows. During this pullback, we still have strong inflows from our clients. So they understand that it's a 3 or 5 year bet. I can't tell you if crypto is going to go up, down, or sideways over the next 3 months. But if you look out over 3, 5, or 10 years, there's still a lot of smart money coming into the space, still a lot of smart people moving into the space. And I think the long-term outlook is strong.
Yeah, I would agree with that. Well, Matt, thank you so much for your insights today.
Thanks for having me.
For Flyer Financial Technologies, I'm Shannon Rossick.